What's up, guys? John here. The U.S. national debt is increasing by $1 trillion every 100 days.
U.S. national debt now stands at more than $34 trillion.
America's debt is growing $1 trillion every 100 days. If Congress doesn't take action, it's only going to get worse.
And some of the biggest banks in the world have just made an announcement. Bank of America, JPMorgan Chase, Scotiabank, all over the last 30 to 45 days made an announcement that the U.S. dollar is in very, very, very big trouble. And that, for example, according to Forbes magazine, it is going to be a crisis, a death spiral crisis. Grows after Bank of America issues a shocking $1 trillion every 100 days warning. And they go on and they discuss just how bad this situation is. But when you look at what Bank of America is saying, then you look at Scotiabank. They're saying that in the battle of currencies, the U.S. dollar is most likely to fall, predicts a new report from Scotiabank. The forecast indicates the U.S. dollar will fall the most in 2024 and continue its downward trend thereafter. The development gives ammunition to BRICS and other local currencies to replace the dollar as the world's reserve. Now, they have $1.4 trillion in assets. It's a pretty big player. JPMorgan Chase saying the same thing, that Jamie Dimon warns U.S. dollar driving towards a cliff as debt snowballs.
Jamie Dimon, America's top banker, he's sounding the alarm on our growing national debt.
This is only the tip of the iceberg. When you see what is happening and what's going to happen in the next couple months and years, you're going to see a whole different world being rebuilt before your very eyes. And this isn't something new. This has been in the works for a very, very, very long time. I'm going to show you proof of this, as well as where we're headed. If you're a business owner, an entrepreneur, or just an American, maybe not. Maybe you live somewhere else in the world, but you're wondering how this is going to impact your financial position. I'm going to break it down for you. I'll give you the facts and show you exactly what's happening behind the scenes. Please hit the like button. Hit the like button. YouTube will share this content to educate the people about what's going on in America's economy and in the world's economy. And if you'd like to fix your credit to position yourself as best you can, we'd love to help you if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report. Go to greatcreditfast.com by clicking the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So, this is shocking. Say, as with any financial crisis, there will be a warning signs when the national debt comes home to roost. Though for consumers and markets, this realization may not happen in synchrony. At a policy level, Gomez believes that there will be parties buying debt decide that the model is simply no longer sustainable. This could be triggered by government policies announced early in the administration, which in turn will spook the market, seeing a hefty price tag. The most important thing about debt for people to keep in mind is someone needs to buy it. We used to be able to count on China, Japanese investors, the Fed to buy the debt. All those players are slowly going away and are actually now selling. Well, I would also argue a lot of them are going away because of a lot of really bad policy decisions. Many would argue that the U.S. dollar has been weaponized, pushing for division throughout the entire world. And other countries are looking at the dollar as no longer a safe haven, but instead a risky place to put money, right? And so you're going to start to see that's going to be just one small facet of this problem. America's ability to pay its debt is a concern for the nation around the world that owns $7.6 trillion chunk of funds. The nation's most exposed are Japan, $1.1 trillion as of November 2023, China, $782 billion, the UK, $716 billion, Luxembourg, $371 billion, and Canada, $321 billion. If at some moment these folks that have so far been happy to buy government debt from major economies decide, you know what, I'm not too sure if it's going to be a good investment anymore, I'm going to ask for higher interest rates to be persuaded to hold this. And they say this is exactly what happened to Liz Truss. In 2022, the British MP backed a mini budget featuring a raft of fiscal stimulus, spooking the city to the extent that the pound spiraled to the lowest value ever against the dollar. And what happened? Mortgage rates spiked by 2% in the matter of weeks. In the following trend, mortgage, a cornerstone of Western economies, are precisely where consumers will start to feel the heat. When mortgage rates go above 7 is when consumers will start pushing for change, says Gomez, adding that if policymakers don't take steps now, the public will go back to these rates, if not worse. Now, what's very, very fascinating is when you look at what's happening with the dollar, at least what the heads of some of the biggest banks are saying is happening to the dollar. And then you look at some of these advancements, for example, with BRICS nations, this came out yesterday, they reveal work on blockchain payment system for BRICS nations. Russia president revealed on March 5th that BRICS bloc of emerging economies is considering developing an independent payment system based on digital currencies and blockchain to reduce reliance on Western financial systems. We believe that creating an independent BRICS payment system is an important goal for the future, which will be based on state-of-the-art tools such as digital technologies and blockchain. The main thing is to make sure it's convenient for governments, common people, and businesses, as well as cost-effective and free politics, right? So you're seeing this big push against and away from the dollar. 159 nations are, look at this. Russia plans to pitch new payment system to 159 nations. And this came out 2 weeks. This came out 2 weeks before this happened. And then they did pitch it, which was yesterday. And so this situation here is the latest update. Russia, with the help of BRICS, is planning to pitch the new payment system to 159 countries around the world. The 159 countries hail from the global south, Asia, Africa, Latin America, and include developing countries globally. Now, I'm going to show you this. This is absolutely shocking. So already, you're already seeing China drop in treasuries 40%. You're seeing that foreign buyers are fading away. But what's really shocking is this. The US dollar loses its preeminence. And when did this come out? This came out in 2018. Right, so 6 years ago, roughly 6 years ago. And when you look at this here, and then you just search, what you'll see here, you're going to see, they look really happy. Then you go over here, and then you click, and then you scroll, and you look at what is behind. It's the same group, right? So the same exact group, and yeah, here's what they say happens next. They say that what we're going to start to see is a dollar losing its preeminence. Today, centralized global monetary and financial system featuring a dominant US dollar mutates into a world with multiple reserve currencies and financial powers of influence. It sounds very, very much like BRICS nations. And so what they say is that it mutates to the world with multiple reserve currencies, financial powers of influence, mirroring the shift from the British pound to the US dollar as a reserve asset. As economic importance traditionally leads financial and monetary preeminence, the euro and renminbi are likely to gain importance alongside the US dollar and increasingly meet the world's demand for reserve currencies and safe assets. Now, they say this is going to assist with inclusion, and it's going to be a way better system. And that's what they say. And they say it again here, saying that in addition to diversifying sources of global liquidity and helping to balance trade flows, stablecoins could also boost financial inclusion by reducing the global's poor's dependence on physical cash. 1 in 3 adults worldwide does not have a bank account, most of whom live on a few dollars per day and do not meet the account balance requirements. This problem is compounded by the limited reach of physical banking infrastructure around the world. Holding, managing, and transacting in cash imposes significant logistical, financial, and security burdens on the unbanked. Even when bank accounts are opened, minimum account balances are held and transaction activity is kept at a minimum to avoid incurring banking fees for most banks in the world, the 1.7 billion people unbanked, right? So this is what they're saying is going to happen next. Now you have to ask yourself, how is this all going to come to a head? How is the dollar going to fall? Is it actually going to fall? What I personally think is going to happen is I believe we could see this being the major domino, which is that we need to sell $11 trillion worth of debt every single year for the next 6 years. And the only way in which we're going to be able to offload and sell a lot of this debt is we're going to have to increase interest rates to make this debt attractive for these foreign buyers. And when we have $17 trillion in outstanding consumer debt, Americans are tapped out. If credit card interest rates skyrocket, mortgage rates skyrocket, auto loan rates skyrocket, everything gets more and more expensive, how are people going to be able to afford it? They're not going to, right? So what's ultimately going to happen? There's going to be a massive demand for social services. We already have 300 universal basic income pilot programs in America right now. A massive demand for social services. You see a lot of newcomers coming into America that need assistance as well. And you look at our unfunded liabilities. You add everything up together, it's an absolute crisis. This $1 trillion every 100 days is going to pale in comparison to where we're going to be going the next 6 months, 12 months, 24 months. It's going to get worse and worse and worse. Interest rates are going to skyrocket. And I think America is in a really, really, really challenging spot. Probably one of the most challenging spots we've been in probably in our lifetimes. I wonder what's going to happen next. Is it going to be all of this going to come to a head in maybe at the end of the year during that big political moment, and then right after that something really big is going to happen? Is it going to be right before that? I mean, what do you think? Do you think we're walking into a really, really, really big problem? And Bank of America, when you have Bank of America saying it, Scotia Bank saying it, with $1.4 trillion in assets, you have JP Morgan Chase, all of these things happening. You have the regional banking crisis. RXR CEO, they have a $21 billion in real estate assets, came out saying 500 regional banks are likely going to fail or be consolidated over the next 24 months. If you were another country and you're looking over at America and you're seeing our policy decisions, how the dollar is being weaponized, you're seeing a bunch of regional banks getting downgraded by Fitch and getting consolidated, would you say, you know what, I want to park a lot of money in America, or would you try to de-risk yourself? It's a big question. Curious as to what you think. Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself, I believe we're going to see a situation where interest rates are going to skyrocket, and we're going to see overall a lot of Americans being pushed out of work. We're going to see layoffs continue to pick up, and I think there's going to be a lot of opportunities to invest. So if you have great credit, you're going to position yourself in a much better way to get funding. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to greatcreditfast.com. Click the link in the description just below this video and schedule a free strategy session for Monday. Catch you next video.